Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq-100 internals and technicals. It's great to hear from you, Mark. Welcome back to Trade Talks, and certainly what has been a volatile month, not only for the Nasdaq-100, but of course all the major averages. So let's talk about relative strength as it relates to the Nasdaq-100.
Sure. Thanks, Jill. Great to be back as always. Wanted to start with this indicator, which is a pretty widely followed indicator of technical strength on a 14-day basis. What you're seeing here is about 5 years of history of this index versus its relative strength. I pointed out the last couple of times that we've crossed below that level of 30. That's sort of the widely accepted boundary of what you're considering to be overly bearish when a bear market takes hold. Of course, we have officially entered into a bear market on the index, but you can see on this most recent turn, we're getting into the third month of this pullback, and it's quite a bit longer in duration than the last one we saw in March of 2020. So just wanted to highlight again, in the past, sometimes we've seen these quick corrections, right? Snapbacks once you hit that level of 30. We did kind of snap back when we crossed below 30, but now we're kind of oscillating back towards that level. So not indicative of what you would consider, bottoming activity, at least from this indicator. That's what we're seeing.
Right. And Mark, of course, we have to think about time frame when we're looking at these indexes. So what are you seeing when it comes to the short term?
Yeah, so short-term moving averages, you look at the 20-day, you look at the 50-day, we're still below both, right? What you're looking for is really for that 20-day to sort of start evening out a little bit, going a little bit more horizontal. It's still quite negatively sloping there. You can see we've got to cross above that first before we cross over the 50-day, which we're quite a bit below. So that's kind of what I'd be paying attention to in the near term, is looking for that 20-day to just start getting a little bit more horizontal in its orientation. Again, consistent with previous bottoming episodes, but you look at the things that I've highlighted here again, the last few times we've seen those crossovers on the downside, quite a bit longer in duration in the current state.
Right. And of course, we have to take a look at the long-term moving averages as well.
Yeah. This one doesn't look much better at all. You could see we crossed over the 100-day after bouncing off of it a little bit right at the beginning of the year, then crossed quickly over the 200-day, tried to rally back above it, but kept seeing, overhead resistance on that indicator. That's probably the most important one in terms of seeing, a return of some sort of a bull market scenario. Right now, though, because we're so far below it, it's probably going to serve as that overhead resistance. Even if we kind of bottom in the short term and start to get some stability, there might be quite a bit of sideways market activity to have to work through before we start to, exceed those longer term thresholds of technical strength. So we'll be keeping an eye out for it for sure. It's just, again, not analogous with anything we've seen recently in terms of the duration of how long this has taken place, even though March 2020 was, at least for now, still more severe of a pullback. It was quite a bit shorter in duration.
Right. And of course, Mark, I want to get your thoughts on options positioning and volatility.
Yeah. So, I mean, these show you a pretty consistent story, right? You've got upward sloping on both the overall SIBO equity put call ratio. That's for the entire U.S. equity market. What I've plotted there is the 1-week rolling average going back to end of 2015. And you could see we were, pretty negatively sloping overall on that activity, except for that, blip during the COVID crisis. But now we've really kind of convincingly started sloping upward on that in the last few months. You could see it's broken pretty consistently above that negative trend line. And that's consistent with what we're seeing with volatility, right? So if you look at VolQ, which is the Nasdaq-100 Volatility Index, you see that big spike, right, in the COVID crisis. We're nowhere near that for now. We haven't breached 40 versus, blowing through 40 and going almost up to 80 back 2 years ago. But we're positioned again for that kind of trend line that is upwardly sloping that, to me, at least indicates that we're not done. As long as we're making higher highs and lower lows in vol Q, that to me means the market is nowhere near approaching a level of stability where it could start to really work through all the negative headlines and start to build off of some base, at least from the downside, right? So all these things we'll keep watching. It's not in any sense of the word, encouraging what we're seeing with technicals so far, but figured we'd do a check-in given that we're, in month 3 now of this downturn.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.